Hey guys and girls, it's Nathan Birch here, and yes, I did just get fresh cuts from the barber. So just tuning in for today's question and answer Facebook live session. Start asking the questions away and I will answer whatever it is you've got to ask. Yes, I am wearing thongs as well today. That is a question on the agenda, so if you happen to ask that. And yes, these are real silver thongs on my wall.
No one's on that stage, so keep it.
No one's got any questions yet? I don't know what you want me to do at this point, whether you want me to start dancing, whether you want me to start talking about Bill Shorten's circus of an the election campaign. You know, I still think it's a joke. Not saying where to vote, not saying to you know, entering politics on that front, but Bill Shorten, you're a wanker and your policies suck. Yeah.
Ask any questions that you guys might have in the comments section and Nathan will answer them for you.
I'm feeling awkward standing here without having questions yet. We're just testing out Facebook Live, everybody. I forgot to post it out there to say everyone tune in, but if anyone's watching, no?
Give us a bit of a market update and what kind of deals you're doing at the
What's
moment.
happening in the market at the moment? What I see in the Sydney property market is the market is still hot and it is still strong. Looking at some stats of recent times, we're looking at the Sydney property market is still short lots and lots of dwellings for the people that are here. I remember going back and talking in 2011, which was 5 years ago, about the current shortage at that point in time, and it was 180,000 dwellings that we were short. We are now 330,000 dwellings short. So we need to build houses to accommodate people. For developers to build houses, they need to be you know, able to make a profit out of doing that. And from that perspective, you know, we're short on property still. So I don't think that we're going to see any slowdown anytime soon. From the Sydney market, I've seen it move probably 10% so far this year in the markets that I look at. So congratulations to everyone that's been buying in those markets. You know, the market is still quite strong out there. Looking at the Queensland market, I see that the Gold Coast and the Brisbane are still hot markets. Very good opportunities out there to be buying stuff that's below market value, well below what people were paying for them in 2009, which was 6-7 years ago. And the boom, we're on the eve of the boom here. So looking at the Gold Coast and Brisbane, very, very good buying opportunities out there at the moment. I've certainly been buying as much as I can. You know, you might be asking me, what is Nathan buying in 2016? Still properties, still the bread and butter sort of stuff. Been buying some land banking properties where I can be, you know, developing and building blocks of units, shopping centres, skyscrapers, 20-storey buildings, all that sort of stuff, just for fun. I wouldn't be able to do that if I didn't build the foundation property portfolios over the course of the last decade.
And what does buying below market value mean to you?
What does buying below market value? Buying properties below market value is you know, very important and crucial for minimising risk and also creating equity to push yourself forward from the property that you're buying today into the next property. What I mean by buying below market value is if you've got, you know, I just picked up a property this morning for a client for $250,000. It's a 2-bedroom townhouse in a very good, strong growth corridor. Rent on that is $320 per week. So it's good rental income, good growth aspects, and $250,000 compared to the fact that you can't even buy the cheapest property in the market is on for $299,000. So it's like 50 grand below market value. Most of them are selling around the 320, 330. So if the market was to take a step back, for whatever reason, if Bill Shorten got in and crashed the property market and went backwards, you'd still be safe and protected. And that's what we're all about here, is making sure that you're putting an extra strategy in there, putting a buffer in there, and making sure you've got room for growth because you're making money on the way in.
Mm-hmm. And what kind of deals do you have going at the moment?
What sort of deals I've got at the moment? You know, you can still buy properties in capital cities for under $200,000. It's a matter of looking. You know, I buy properties in Sydney for under $300,000. It was only yesterday that I bought one for a client for $280,000, where comparable sales are around the $330,000. So it's a good $50K just for signing a contract there. You know, I pick up blocks of land for clients and help them build houses. So we don't sell house and land package or anything like that. But what the strategy that I've developed over the last few years as well, how to increase your bottom line, is to buy blocks of land very cheap by buying them in bulk. So I can pick up blocks of land, say for instance in Kellyville in Sydney, house and land package selling for $1.2 to $1.5 million for house and land brand new. That's the entry price into the Kellyville market. I pick up blocks of land for 500, 600,000, build houses on them for the clients. They build houses on them for 300,000. So they're into them for like 800, 900,000. They can sell them off straight away, make 400 grand on it. So it's developing with minimising all the risk because you're just building a house. There's no worrying about DAs, not worrying about if something goes wrong, all those sorts of things. So it's cutting out those developers which are making the big marketing buffers and commissions on you. What I find out there at the moment is there's a lot of people out there spruiking kickbacks and stuff like that with their property investing, and it's fraught with danger because when you give like a kickback or something like that, there's lots of money going around in those sort of deals. So it's important that you take the same strategy of buying below market value with whatever part of your investing journey you're at any one point in time, even if the principal place of residence be that fact. Looking in the Queensland market, I can pick up properties. I bought one today for a client, $182,000 for a 2-bedroom unit, which is in Brisbane. 2-bedroom unit, $182,000, fully renovated. Rent on it is $300 per week currently. So positive cash flow, good upside for growth. These things were selling for $250,000 in the last boom. When the boom came in about 2009, the market went backwards. They're probably worth around the $230,000 today. So once again, we're picking them up well below market value with a strong cash flow and good upside for growth.
Hey guys, just to let you know, if you have any comments, we're live at the moment. Post them in the comment section below and Nathan will answer them for you.
I'll let you do a dance.
What type of clients do you work with?
What sort of clients do I work with here at B.Invested and Property Investment Agents? The clients that we work with range from being an 18, 19, 20-year-old kid, building their property portfolio, following the footsteps of myself, to make sure that they can get out of the workforce by the age of 30, up until people that are in professional jobs, people that are older, people come in with 30, 40,000 starting off with, some people come in with millions of dollars. The rule of B.Invested is we help people put themselves in a better financial position by buying the right properties and having the right strategy. We don't help people buy a property and just say, here, buy this property. We want to make sure that you're not going to hurt yourself along the way as a part of the journey, and be there to push you forward to the next step. And it was only the other day, I sent out a few emails to clients that had helped over the last 5 years, and unfortunately I don't get to call everyone every day and see how they're going. But looking at some of the feedback that's happened, like clients from 3, 4, 5 years ago, which had objections, they were scared about doing stuff, they were scared of buying in a certain market or whatever the case is, but to their luck and to their prosper, they had confidence in what we were talking about, confidence in the strategy, jumped on board, and looking back at their results, which have proven track record results, in good markets, bad markets, and whatnot in between. I remember I got one the other day that said a client was able to sell one of their properties and be able to spend the first year off work with their child. That's what investing's all about, is to have the end goal. So that client, I would have said probably do it a little bit different, but it gave them an option to do that. I had another client the other day that emailed me saying that he's just been able to quit his job and move from Western Australia to the Eastern Seaboard and relocate himself and set himself up here, take a year off work once again to be able to, if he didn't have those properties, wouldn't be in a position to do so. So it's all about helping people. If you're a wanker, we don't like helping you at B.Invested. We don't deal with wankers. We prefer you go to somewhere else and deal with other wankers. So,
what classifies a wanker?
What classifies a wanker? I'm very, very candid because we at B.Invested, our strategy is we're successful. We don't need to do this. We want to do it. We help people. People that don't appreciate what we do, I'm going to be going out and spending time with my family or whatnot, rather than having a conversation about whatever. For me, someone that's passionate about advancing their life and putting himself in a better financial position, you could be starting off with minimal savings. If you've got lots and lots of money and you come to us and all that sort of stuff, and you've got a bad attitude or whatever, I'd prefer not to deal with you. It's not about that. It's about helping people get into a better position.
Awesome. And why don't you buy off plan?
Why don't I buy off the plan? I don't know why anyone would. Looking at the properties that are out there, off the plan or new home properties, new properties, there's a lot of developers out there, they get big kickbacks for selling these things and package them up, tax deductions, Why would you want a negative gear or anything? I agree. The only thing I agree with Bill Shorten is like, negative gearing is a reward for being a loser, right? If you're losing money from buying a property, it's the only reward you're getting from buying that property that's losing money. Like, you wouldn't go to work every day of the week to lose money. Better yet, pay your boss to come to work. Why would you do that for an investment property? When you're buying a property that's off the plan, maybe like 5% of the time, you might do okay out of it. But most of the times they're overinflated prices. So, a lot of the properties that I buy for myself and for clients, I look at them and I might buy a 5-year-old townhouse in a very nice suburb or whatever the case may be, and I'm paying 150, 100, 200 grand less than what the poor owner paid before me because they got ripped off because they paid too much. The developers get big kickbacks, commissions, all those sorts of things. There's lots of money going around backhanded behind those sort of deals.
Do you only purchase positively geared properties?
No, I don't just purchase positive geared. I say out there quite regularly that negative gearing sucks. I wouldn't use negative gearing as a strategy. There's nothing positive about it because it is negative. You wouldn't see, Jerry Harvey go into a Harvey Norman store and say, everybody stop working. I don't want you to work and earn money today for the business. I want us to go into a loss so we don't have to pay tax. Why would you buy a property for the case of doing that? If you're buying a property, it's important to have a plan and a strategy moving forward. And looking at the properties, each property is a part of the jigsaw puzzle to get you from where you are today to where you want to be. And looking at the fact of a negative geared property, if you're buying a property that you're going to make 100 grand worth of equity out of it, it's going to be negative $100 per week, well then you're going to make that financial decision. How long is it going to be negative by $100 per week? Is it at $100 per week now? In 2 years' time you see it as being $50 a week, 3 years, 4 years' time it's back to positive. Well then, that's part of the strategy. How long is it going to take you to save up $100,000? You've got to make those calls for yourself. So I think it's important to have a balanced property portfolio with neutral properties in it, which is ideal. But if it's slightly negative and giving you something for the future, well then you've got to make a decision how that fits in with your planning and strategy to get you to where you want to be.
Cool, and now we have some questions. We had questions all along, but they weren't showing up on the app.
How about I read the questions?
You do that.
Beautiful. Hey Nathan, just want to ask where and what types of property is still available in Australia which are cash flow positive? Thanks. By the way, I'm seeing you in Melbourne on the weekend. Smile, emoji icon. You're awesome. Thank you. I like hearing that I'm awesome. Where are positive cash flow properties? Positive cash flow properties all around us. It's a matter of getting the right deals that are going to fit in line with your strategy. So looking at, you can go to a regional town, get a positive cash flow property. It may not go up, whatever, in value. You may be able to go to a mining town, but mining towns suck. Well, why would you want to go to a mining town and buy a property that's, going to be in a high risk sort of area? I'm not about risky stuff. I like looking at capital cities. So if I reflect on my own property portfolio, I used to buy stuff in Sydney that was neutral cash flow. I was picking up stuff for 120, 130, 150, 170, 200,000. They were renting for 200, 220, 230 a week at the time. Slightly negative, 20, 30 bucks a week. If I look back now, those things are renting out for 400 bucks a week. They're worth 500,000. So I've had a balance of good cash flow. They're positive cash flow now by 100, 200 bucks a week, and all those sorts of things. So I'd be looking at capital cities with supply and demand issues, be it anything on the eastern seaboard would be good value at the moment for that. Looking at value adding from a rental perspective, as I said beforehand, I picked up in Brisbane for a client today, 180,000, rent out for $300 per week. That's probably positive, like 20, 30 bucks a week before any tax deductions. So I hope that helps out. Richard has asked in, does it suit international investors? Depending. You know, a lot of our clients here at B.Invested are, you know, expats. They live overseas in all different countries. I deal with people all over the world. Yes, I will call you at 3 o'clock in the morning if that is the case, sometimes because I never sleep. Just depending whether you can buy in this country or not. If you can't buy in this country because you're an international you know, citizen, you'd have to be sticking to newer properties, which I would suggest not to stick to any of those spruikers, which you know, rip people off by buying off the plan and new stuff. I'd be, you know, we do handle people's strategies from that perspective. So I help people buy properties in bulk, which are like where the developer's gone broke, or you know, buying a block of land and building a new house and those sorts of things where you can make a lot of money from the way in. Ashi Cool, I don't know, sorry for pronouncing that wrong. Why you have thongs on the wall? What does it represent? So thong on the wall represents the fact that I have thongs on my feet every day. People think it's amusing, and you know, I've got these given to me as a bit of a light-hearted gesture from someone close to me. Just because I wear thongs every day, people expect that you conform to society, you go to school, get a good job, go and fit into your little job and your box of your life and be happy with what everyone tells you should be living your life. I made the decision when I quit my job that I didn't like wearing shoes, so I started wearing flip-flop thongs, and that's why I have these guys on the wall, because that's what I wear every day. Tom has asked, which capital city do you think best to buy an investment property? You know, stuff on the eastern seaboard, Sydney and Queensland is my two favourite picks, and that's where I buy my properties in 2016. Louise says, hi Nathan with a hi. Louise, how are you? Jacob asked, are these comments coming through? Yes, the comments are going through. We just couldn't see them streaming through us, and I had a piece of paper with them printed out for me. Gerks Khan has asked, why do people tend to avoid mortgage brokers and chase cheaper interest rates? Why do people tend to stick to the big four banks and the pros and cons? I'm just going to throw a little disclaimer in. I'm not a mortgage broker or a financial advisor. Keep those guys happy that I'm not venturing into other territories that I shouldn't. Basically, breaking it down, people try to avoid mortgage brokers because they have a relationship with the banks. Banks spend a lot of money. When you're a child, you get a Dolomite account or whatever from your bank. People just feel comfortable going to the bank that they've been using forever. The reality is, especially nowadays in the mortgage market, better than ever before, it's important to make sure that you have a finance strategy. You know, I've got one of the best mortgage brokerage firms in the country using a finance, which we tailor-make strategies to help investors, you know, to understand what it takes to build a large property portfolio, and in order to get the right financing. So, you know, in this current market with the APRA changes recently, we go with all different tier lenders, whether it be Pepper, Rock, Latrobe, places you've probably never heard of before, and they don't have banks and outlets like that. People chase interest rates because they're tight asses. Do I think that chasing interest rates is a good thing? No. I think that it's important to make sure, what's the point in saving $10 per week? You can bump your rent up by $10 per week. It's important to have the lender that's actually going to support your investing goals in order to buy those properties. What's the point in saving $5 a week if you can't get that property, or if you can't get your equity out to buy your next property when you know that you could because the bank won't value it, or they've got a policy that will say that you can't revalue in 6 months or 12 months, whatever the case may be. How long should, Prenan, how long should you wait to purchase your second property? How long is a piece of string? If you're, a client of B.Invested and you've got the right foundations set up and the right deposit, the right, structuring in place, a lot of my clients buy 3 or 4 properties in their first day. So, it could be 1 day, it could be 1 week, could be a month, could be a year. Everyone's position is different. If you do have questions on that, you can call us in the office on 1300 367 925. Nick Hale, what are your thoughts on apartment industry in Sydney, Melbourne and Brisbane? Well, I spoke beforehand, if you were watching when I had no questions, and I was talking about the housing shortage in this country, and we're short 330,000 properties for people now. I think we've got a very interesting economy here in Australia because people want to live here. It's the nicest place in the world, so why shouldn't it be the most expensive place in the world? I'm scared of aeroplanes, so I don't go overseas. But the fact is that what I see is that we're a young country. We've got a lot of people needing to come into the country, wanting to come into the country, but we don't have enough housing for them. So I think that the apartments that are being built at the moment, certainly there's some pockets which I think might be overcrowded, which would be right in the heart of Brisbane or right in the heart of Melbourne, that I think that there's not enough property still.
I think my battery might be dying soon.
Battery's dying, okay. Danny Green, single, 100k in the bank, no debt, no property, 75k. Can I make this work? Yes. Give the office a call, 1300 367 925. We will show you a way to make that happen. I've seen people in those sort of positions be able to go on to do greatness, and buy 10 properties in 3 years and those sorts of things, as long as you get the right property and the right strategy in place. James, that's all good. You own these properties, but you still owe the bank millions. When does it end? Well, I could pack up all this shit now, go home and pay off some debts by selling off a few more properties. If you have, I'm just going to break down the simple numbers. If you bought 10 properties, 200 grand, they go to 400 grand. You've got the option to sell off 5 of those properties, get 400 grand a piece and pay out the first 5 of them, and be there debt free with 5 properties. So for me personally, my net worth is my total holdings of everything that I own. If I was to sell everything, shirt from back and everything like that, I'd say it'd be over $100 million. I only owe about 20, 25 million to the bank. So position ain't too bad, but it's important that you have a strategy. Debt is something that is used in any economy, in any successful business, and with any successful investors. At some point, have had some level of debt. So, fearing debt at the start, it needs to be your friend. It needs to be a part of your strategy. It's important to not be too over leveraged. At the same time, it's important not to be too under leveraged. And I think a lot of people go for the either side of the coin. Leon, what are your thoughts on the classic investment strategy where you buy high growth, such as an inner suburb of Melbourne, which has, such as South Yarra, Richmond, accepting lower rental yield and focus on growth? Leon, I grew up in Parramatta, which is Sydney's second CBD. I remember back when I bought my first property, my first investment property. Properties, remember, I was living at the time were about 200,000. That was, sorry, when I was about 13 years old, I observed about 200,000, 250,000, and they're renting out for about 180, 200 bucks a week at that period of time. This is going back in the late 90s. At the same time, the shitter suburbs in Sydney, being out western suburbs, we're selling for 50 to 60,000 for a house on land. They're renting for about 100 bucks a week. If we fast forward to when I first started buying, they were selling for about 600,000, renting for $300 per week in Parramatta. In the areas that I was buying, I was picking up for like 150, 200. They're renting out for 200, 220, 250, whatever. That enabled me to buy a lot more of those properties that are out in that area, plus they're neutral cash flow, they're looking after themselves, not negative cash flow like the ones in the better area. If we fast forward to today, you're probably looking at $1 million for those houses that we're selling for 200 grand to start off with, which have been negative geared for a very long time. They're renting for probably about 700 bucks a week. But those properties for 50, 60k are now selling for 500,000, so they've gone up 10 times. The other one has only doubled. So I don't even understand why you've got a high growth, and people have the perception that you've got a high growth in a specific area. Bread and butter properties regenerify and become affordable for the ripple effect to take charge. And I think that's all bogus. It's, a lot of salespeople out there say, oh, buy close to the city in our new apartment block that we're building for you, because they're trying to sell you some shit. That's basically it. So I hope that answers that question, Leon. Jake asked, any property that can get a neutral positive cash flow that you can get below market value. That's what we do. That's what we focus on here. That's what I buy myself every day of the week, and for our clients here as well. John asked, what is your opinion on Bill Shorten? I'll be back in a second, guys. I've got to vomit in the bin. So anyway, he's going to look after all those people out there. He's going to look after them and make us as greedy investors be forced to no other opinion apart from having to force their rents up. So sorry everyone that's going to vote for him. Jacob, what kind of property would make the ideal investment property? Just depends. Everyone's in different financial positions. So do you have strong cash flow? Do you have not so good cash flow? Do you have a big savings? Do you not have much savings? All those sorts of things. It's important to have a plan mapped out which is going to show you the foundation portfolio of what we need to achieve to get you from where you are to where you want to be. So it's not about just buying the property, it's important to have the strategy to acquire the properties to get you to the end goal. Hope that helps. Bynum, in your opinion, if I was to buy my first home for investment or purchases in general, is it better to purchase a house and land or a duplex or a townhouse or a good option? I don't know. How long's a piece of string? What should I eat for lunch? There's lots of things that you need to factor in, like what can your affordability buy? Is it cheaper to buy in an area than rent? For me personally, I was 27 years old when I bought my dream home. A lot of people out there go, I want to buy the home first. So what comes first, chicken or the egg? Let me tell you though, I wouldn't be sitting here today saying I've got over 200 properties, that are bringing me in over $500,000 a year passive income, and the ability for me to change that so I can put myself to a position. Because I'm serious when I say I'm 30 now, by the time I'm 40, I want to be a billionaire. I wouldn't be able to talk about my portfolio of just 200 properties today if I hadn't gone out and bought my dream home to start off with, or a property. I didn't care if I lived in a caravan. I didn't live in a caravan, but I didn't care where I lived at that point, because if you had $500,000 today, you could invest it in one Lambo, which is cool, principal place of residence, or you could invest that 500 grand into 20 Ford Falcons, send them out there as taxis, bring yourself an income, use that income to buy your Lamborghini. You can have everything. It's important of how you structure that first. So that's what I'm referring to. If you need help from that perspective, call the office once again, 1300 367 925. Joanna, do you think with limited funds at hand, a strategy that could help to build deposits for buying land in buy and holds in today's market? When I first started investing, I worked 2 full-time jobs, hustled my ass off, and did whatever it takes to get to where I wanted to be. And I knew that I had to make some sacrifices, some commitments, and I knew what I needed. I set out the roadmap for the next 10 years. I knew what I needed to go and do, and I had to try and find ways to do that. Whether it be staple my socks together, whether it be, don't put the aircon in the car, whether it be eating for $1 a day because I'm getting the stale bread, getting all my friends that I worked with at the time to chip in $1 each, and we just go and buy bits and pieces and eat our lunch for $1 a day. Whatever it takes, try and minimise those expenses, save as much as you can, and put it towards each purchase. When you're buying the properties, if you're buying them below market value, you're making sure that you're getting equity so you can put it into your next deal. If you're making sure that you're buying with a strong cash flow, it's not going to affect your lifestyle, it's not going to affect your serviceability on your loans and all those sorts of things. So it's important that you have a strategy in place to do that. And final question from Dean. Sorry if there's more questions coming through. I'll try and make some YouTube videos and I'll take notes of them and make YouTube videos shortly.